Hi there. Very good afternoon to all of you, and welcome to this live feed. So, as promised, I'm live on chat, and this is an interesting chat that I'm going to have because I'm going to talk about three companies as well as the market. And as you all would be realizing, that the market has run up a lot and it is just running along and chugging along towards the 10,000, 9,500, 9,600 as we have seen the levels. So let everyone join in here and I'll discuss about the markets. I'll also discuss about three stocks. There have been comments about a number of stocks that people want me to talk about. More comments have come in for, or requests have come in for FL India. So I'll discuss about FL. People believe that the valuations are extremely expensive and one should avoid it at around 1400, 1500 levels. So I'll discuss about FL. I'll discuss about Kilpest again. So most of the investors in Kilpest are pretty wary of the fact that the stock is not moving up, although a lot of tests are going on and they have got the approval, etc. Yet the stock is at 130, 140 rupees. So I'll discuss a little bit about Kilpest, and also the third stock I'm going to talk about is, of course, Tanla Solution. That would be the third stock. So Kilpest, Tanla Solutions, and FL India. I'm going to talk about Tanla. Nearly made a circuit today, a circuit high today, and I did talk about it on my Patreon channel that one should be buying it, and many who are on Patreon at the moment would have got the notification to buy it at around 65, 63 levels or so. Uh, so I'll talk about Tanla Solutions as well. So a lot of things to understand. Also, this market that, as I has had envisioned, is not quite going down. So where is it headed? So discuss about the markets as well. 9,500 is upon us, and probably we are headed much higher from here. Is it because the market think that the lockdown is going to be over, or is it because the market think that vaccine is about to come out, because a lot of companies are making it, so the vaccine would be something that will be eminent in the next 2 to 3 months. So these all things are in my mind as to what all to discuss in this live chat. Welcome to all of you on this live session. I want to remind you that the super chat feature is on, so kindly ask me questions through that, so I'll be able to answer the questions between my analysis of the markets and the stocks that I'm going to discuss, and it will help me grow the channel as well. Also, you can visit my Patreon channel. The Patreon channel, the link is always provided in all the videos that I post. So you can visit the Patreon channel. There are a lot of articles and videos that I put up. Also, I send notifications to the members with respect to if there is any movement in the stock that I feel that could come in and one can grab that opportunity. So those notifications on stocks also go out. The membership begins at $2, and if you want a portfolio analysis, then it is $25 a month. I'll try to help you build a portfolio. It is not that I'm a fund manager or anything, but I'll help you how to choose stocks and how to build portfolios, etc. So that is the range on Patreon at the moment. I would also like to tell you that a lot of people was asking me and was sending me queries with respect to what are the different ways to help me, or in order to help the channel. So but there is an option of UPI payment as well, but for that you need to email me, and if you are happy to uh, do patronage through that and don't want to go through the route of Patreon, or you're having trouble sending money through credit card, etc., you can do that as well through the UPI payment. So kindly email me for that, and I'll let you know what are the benefits involved with the kind of you can say support that you'll provide. So So all these things I have just tried to keep things manageable in all respect. And probably later on, 1 month down the line, few days down the line, I'll definitely start with the join button on YouTube, in which you all people who are not able to be a patron member can do that through here and get the notifications of similar kind as on Patreon. So these are some of the pointers, or some of the things that I wanted to talk to you about. So the three stocks, as I said, that I'm going to talk about is FL, Tanla, and Kilpest. I'll definitely answer your queries. Like Shashi has asked that kindly talk about Syngene. So I'll definitely answer your queries later on as well in this live feed. So let's begin with Kilpest first of all, because a lot of queries had come in with respect to Kilpest India. And see, the stock has not moved, but according to whatever the management has said, and I can tell you here personally that I have shared emails with the management, and it has been categorically told that they are going to do something like around 5 lakh tests minimum in the next 2 3 months. That includes April. So in the next couple of months plus April, they're going to do minimum 5 lakh test, and if each test costs is around 700 rupees, and that's what I'm gauging, then you can easily estimate that around 35 crores would be the sales number. That is what I'm estimating for the June quarter. So the June quarter results would be out in uh, something like August. So the June quarter results would be out in August, and probably one should wait for that, because if they are certainly going to do something like 35 crores or 40 crores for that matter, if they do more than 5 lakh kits, I'm hoping for around 7 lakh kits at the rate of 800 rupees, and that would be 750 800 rupees a kit. Sorry, 7 lakh tests, with each test costing around 750 800 rupees, and that would amount to something in the region of 55 crores. uh, if that happens, then that would be just amazing, because if you analyze their numbers, then 20% of their sales is their EPS. I'm not talking about the profit. Their EPS is 20% of the sales. So if they do 50 crore sales, then the EPS would be 10 rupees, nearly 10 rupees. Now they did an EPS of 8 rupees in FY19, and they are going to do an EPS close to 9.7 rupees or so in FY20. So close to 10 rupees would be equivalent to the earnings that they had produced in FY20. In that respect, this stock looks extremely attractively priced even now. I would not suggest people to get into the stock because of the kind of weird movement it is showing, because I expected it to go beyond 200 easily with this news, which it did not. So do not invest into the stock at this point of time. But those who are holding even at 140, 145, 138, or at lower levels, kindly hold on to the stock. Let the numbers of June quarter come in. Let's see what is going on, what kind of numbers on the top line and bottom line Kilpest comes up with, and then we could take things forward. I'm a firm believer that things will pan out well over the next 6 to 9 months. So I stick by my targets, and let's see how the numbers would pan out in August. So the June results will be in August, and then there is a fillip of the March results, which should be good. So an overall EPS, which you see on many websites such as Money Control or Economic Times, etc., that you see an EPS of 8 rupees, that would swell up to 9.5 to 9.8 rupees with this March quarter numbers. I'm positive about it that it would be close to 9.5 rupees. Considering the stock is trading at 130 rupees or so, it is not expensive at around 15 times earnings, considering it is a diagnostic company. So all that taken into consideration, uh, in my opinion, you should hold on. But again, a standard disclaimer applies, and take your own analysis into four, and take your decision with respect to what you want to do with Kilpest. But I would wait for the results in August for the June quarter, and then take a decision on it. So that is about Kilpest. The second stock that I wanted to talk to you about is FL India, and many of the people have asked about what needs to be done in FL India, and whether it is extremely expensive at 1400, 1450. There are two aspects to it. First is what was the 52-week high that was made recently? It was 2300. What was the PE at that point of time? It was around 92 rupees. Sorry, 1992 times. So why was FL trading at 92 times with an earnings of around 26, 27? There must be some good reason for it. Otherwise, the stock would not trade at such enormous valuations, similar to say a DMart or a Gillette at its peak and likes. See, FL has a very unique business, and I have told that even in the presentations which I made, and uh, they are into mobile advertising most of all, and they are producing or helping clients make those mobile advertisements work out to them, which means they are into mobile intelligence as well, artificial intelligence, in order to procure more clients for retail players, for players who are in the online domain like Facebook, Netflix, etc., and other companies. They are into that domain and trying to make money from it. Yes, margins are not great in it because these large companies call the shots, but they are the only company listed in such a space, and the only other company that come close to it is Tanla Solutions, and I'll talk about Tanla next up. But just to tell you about FL, it has grown at, that was about the business. It has grown at 27% year on year for the last 10 years, and it aims to grow at 25 to 30% year on year for the next 10 years, and that was from the management. Why I believe the management so well? Because they have produced results over the last 8 to 10 years. So at 1450 rupees, with earnings of 26 rupees, probably 28, 29 rupees for FY20, or less than that, probably 23 rupees. Let's say they have a negative earnings for the March quarter, which it will not happen because only 10 days are lost, 10, 15 days. But then there was trouble in Europe well before, when India locked it down. So let's say they have an EPS of 23, 24 rupees for FY20. At around 1400 rupees, it is around 65, 66 times earnings, which is expensive. I won't say which is very cheap, which is relatively expensive when you consider an EPS of 25. But if you see 2 years down the line, I have no doubt, or 3 years down the line, the company should be doing an EPS of 60 rupees. And why I'm saying this, if you just do the maths with the compound interest at 27%, let's say FY21 ends up being just a minor growth of around 10% on this. So they go to 30 rupees EPS. So in FY21, the EPS goes to 30 rupees. From around 23, 24, they suppose they go to 27 rupees. So from there on in, there has to be a very good recovery in the online space in FY22, and I believe by FY23, the stock should clock anywhere between 55 to 60 rupees earnings at a 27% CAGR growth, and that is a conservative estimate. So if you consider that probably in FY22, which is 2 years down the line, the company could do an EPS somewhere in the region of 35, 36 rupees. At around 35, 36 rupees, at 1500 rupees or 1400 rupees, the stock is trading at something like 30, 35 times, which is again not expensive, 35, 38 times. So these are the permutation combination that goes on, and that's why the stock is not going below 1300, 1200 rupees. because everyone understands, or the large players understand, that probably in 1 year or 2 years time, the stock will find its mojo, and trading at 35 times 2 years forward earnings is cheap, and that's why people are getting into the stock at around 1300, 1400. So if you have bought it at higher levels, you can average around these levels. If you have not bought into the stock, you can buy it around 1350, 1400, and keep a stop at 1000 rupees. I don't think the stock would be hit. The company has good robust numbers, debt free company, not a lot of debt, very less, you can say, working capital debt, and it is in a very interesting new age technology domain. So that is why I had recommended it even at expensive levels at 1700, 1800 levels, and I'm more positive with this 20-30% you can say fall in the stock. So that's my opinion about FL. Now the third stock that I wanted to talk to you about is Tanla Solutions, and this is a stock that has been, you can say, mirage for many. It has been an enigma for many for the last 4 or 5 years. I have looked at the stock since 2015 end, so around 2015, early part of 2016. This came into my radar, and interesting company. The kind of business they were doing were interesting. At that point of time, they were doing A2P messaging service or peer-to-peer messaging, and all that. What was happening was, whatever you buy through say Amazon, etc., or other products that you buy online, and there is a message that comes to you for OTP, or you do any kind of transactions online, and the OTP messages that come in, 90 to 95% of those OTP messages comes through the you can backend operations of Tanla Solutions, and they get some kind of fees or profits out of it. And you can understand with what happened in 2016 November with respect to demonetization. The stock went up very sharply. So kindly look at the chart at that point of time, what happened. So the stock went from around 38, 35 rupees all the way to 60, 62 rupees, 66 rupees. That was the high that it made in January, February, I think, around that time in 2017. And that period between October, November to January, in just 2, 3 months, the stock went up 90% or so. The reason behind it was the increase or surge in online transactions that was taking place, surge in, you can say, card paid, you buying on online shopping sites, etc., and all the profits of that messaging came in, and the sales numbers were absolutely fantastic for that December quarter, uh, as we have seen. And why I am bullish at this point of time is purely because of the same reason, apart from what they have done recently. So let's take that aside, that they have gone in and acquire a company like Gamoga, which is absolutely similar to what Affle does. Then they have acquired a company like Carex, and all their you can say sales number would be added into this March quarter numbers. Let's take that aside. Even if we leave that, with the current scenario, what has been happening with lockdown and everything else, I believe that Tanla is going to be a beneficiary of it, because more online messaging things would happen, more online trades would go through rather than offline, and there are essential items being sold by Amazon, by Flipkart, etc., by grocery shops, and all these profits would come into the coffers of Tanla with this A2P messaging. Also, adding on to it, they added Gamoga on 24th, 23rd of October last year. So the December number did not have the full potential of what Gamoga can do. Gamoga as a business is also into, you can say, advertising. They have platforms like Zomato, etc., under their uh, uh, ambit, and whatever transaction that go through, you can say, is not quite Zomato, but something like Swiggy and Nika, etc. So these all companies are attached to what Gamoga does, and they help in their you can say online domain. So and all these revenues would come into Tanla's profitability or sales numbers. So we are playing this theme of online transactions, the online selling of products, the online retail space through this, along with, you can say, there are other companies like Reliance, for that instance, which have gone in there with Reliance Retail, GeoMart, and Facebook, and so on and so forth. So this is the new age thing that I was talking about when I was talking of technology, not the typical IT that we see with the TCSs or the Infosys or other companies of that sort. I'm talking of new age technology that is being brought into by companies like Tanla and FL, etc. uh, Long term, very bullish on the stock. It is around 67, 68 at the moment. Now the question is when to buy. I would not suggest you to buy on this upsurge. Whenever the market cools off, whenever the market falls big time, everything will fall. Tanla may stay stable, may fall a little bit. Every 2 3 rupee decline is a good opportunity to get into Tanla Solutions. Keep a 50 rupee stop loss and trade. Always keep a stop loss. And again, standard disclaimer applies on all my analysis that I put up, that these are not recommendations. These are not something that I would say that you go ahead and blindly buy. Do your own analysis, talk to your financial advisor, and then go ahead and buy into the stock. But my analysis on a personal basis says that the stock is headed to 130, 135 levels, even technically, once it crosses 72, 73. And that could happen by the time the June quarter numbers come up. So that would be in August. So probably in the next 3 4 months, we could see that surge. That doesn't mean that you go ahead and buy the stock. All I mean to say, and all I want to express, is that the company is good and one can look at it from a long term point of view even now. So that was about the three stocks that I was talking about. Once again, I want to remind you that the super chat feature is on. Yes, kindly support me through super chat, and once you do that, I'll be able to answer the question in detail because it stays on the right hand side window for a longer period of time. So let's look at, or let's see what are the questions that are coming up. So Sachin Soni has asked Blue Star. Hi Sachin. So Blue Star is a very good company. You can get into the stock, but do not expect immediate returns in the stock. Probably in the next 1 year, you might be in red. But keep accumulating companies like Blue Star on declines, and probably 2 3 years down the line, it will give you very good returns. Sudan Rail Vikas Nigam is a very good stock, but then when to buy it after such a run up, whether you should buy it or you should wait for a decline. So in decent declines, you can get into the stock. But I like IRCTC even more in the same space, and on declines towards 1100, IRCTC also looks good. Avoid New India Assurance, that's my opinion. Okay, so apart from these three stocks, and I just got reminded to me that apart from these three stocks, I wanted to talk to you about the market. So it is at 9500, and I take this thing on the chin that I thought that the markets will not go past 9300, 9400, and the market should come down to levels of 7000. It has not. It is going up. I feel the next level to look at is 9650, 9700. But I believe around 9700, 9750, there is strong resistance. People or investors might think, or traders might think, that the markets would go up to as much as 9900, because that's the 50% retracement of the fall that we have had from 12,400. But I have a firm belief that we could see selling and high level of selling from 9700 levels, or maybe even before that. So one has to be very careful now that it has already run up so much that you buy here and you could be stuck. Yes, you can buy, you can say individual companies which you think are going to come up with very good results and going to have no material impact of a market fall. So those companies you can get into irrespective of where the market is. But if you ask me for overall analysis of the market, then from 9650, 9700 levels, we could see selling. I don't know how much, but wait for major market falls and declines to get into any sort of stock or get into any stock. So, in my opinion, we could see 9700 in the coming days, but from there on, we could see a fall that could last for few weeks. So, kindly be very cautious. And add to that, we have the May series coming up, and the May series normally is for the bears, and it normally makes the market go totally red. And June and July are very good for the market. That's what I've analyzed over the last 8, 10 years as to what has happened in the market. Probably one or two May series have been good, but others have been really bad. So you have to be wary about this fact as well. Avoid starlight technology, and the reason behind it is that one has to be understood of the fact that Reliance Jio, when it came out with its business across India, they have come up with their own infrastructure, and everything that they have put up is from their own back-end operation. So Sterlite has lost much of her business, especially abroad, because of what has happened recently, and probably they are going to come up with extremely tepid numbers in the next 2 quarters because of what has been happening in Europe and US. I don't know about the Airtel numbers. I need to analyze that. Probably I'll analyze and put up a video for that. But I believe Airtel, along with Reliance, with its play of this telecom, and with the kind of situation we are in, and long-term solution looks like online teaching, online, you can say, office work, then Airtel would continue to do extremely well going forward. So, in my opinion, it is a good share to buy on any declines. Kieran Dixon might be going up because people do not think that the results would be as bad as they had earlier envisaged, and probably the results would be better. But I would not recommend, I have always recommended Dixon around 3000, 3500 levels. I would not recommend you to buy Dixon at 4200, 4300 levels. Avoid Apollo tires. In my opinion, Apollo tires is not quite there. I think the tire stocks will struggle as long as the auto industry struggles. So, yes, auto stocks are going up at the moment in hope of better numbers in the coming future, and they have already been beaten up. But that is not to say that all auto ancillary would do well. So, avoid Apollo tires. HUL is a good stock. The only thing is the valuation, which is expensive. So probably any declines to 2000, under 2000 levels are very good levels to get into HUL. LNT Infotech. It is a good stock, LNT Infotech. Very good stock, and probably any declines towards 1400, 1380 and all accumulate LNT Infotech. Thanks a lot, Arun, for your super chat contribution. Raymond, after the demerger looks good, but again, the levels that it is currently trading at, let me see what is the current level of Raymond and where it could be headed. So, if we look at it, then Raymond has more or less changed its theme into being a kind of a real estate company and at all. So, trading at around 240 rupees. In the green today uh, has been bruised and battered. See, on a risky level, if you are a very risk trader, then you can buy into Raymond. If you have bought Raymond at higher levels, you can hold on to it. try to average at these levels and probably exit when your price come in. So these are not the stock to invest over 5-10 years period. So if you have not got into it, kindly avoid it. But if you have it, average at these levels and exit when your price comes, that average price comes in. LNT is an avoid to me with the kind of situation we are into. Thank you, Sai Charan, for your super chat contribution. Kindly shoot the question, whatever question that you are having. Trent is a very good company, so I believe you can get into Trent, but the point is, if the malls doesn't open up and things get very, see, if there is announcement on the third that most of the things open up with a few restrictions, then this is a very good move of the market, and people are going to make more money. But if this even continues for a week or 10 days more, the lockdown, then we could see trepidation in the market, and especially in businesses which are related to, say, malls and you can say clothing, etc., because these are doesn't fall under essential items. So you could see uh, fall in these stocks pretty quickly. So be very while you invest into the market at this point of time. When will there be buyback of Tanla? Well, the date has not been announced yet. I'm also waiting for the date for that buyback at 81. But just to tell you, on a long-term basis, it is a very good stock to hold. Top three chemical stocks, although they have run up, so kindly buy on declines. In my opinion, what chemical stocks that I like are Galaxy Surfactants, to an extent, Sudarshan Chemicals, and I also like something like Veneti Organics. These three are top of my mind that these will do exceptionally well. Also, SRF and IOL Chemicals are good as well. So you wanted three, so I gave three at first. I'll definitely make a video on Info Edge, Kiran, in the few days. So the video is about to come out in the next few days. So just be patient, and probably in a week's time you'll have Info Edge as well. Arvind is a complete avoid, and this space of textile is a complete avoid. So even if you have got into Arvind, then exit on major up moves, and any such stock which is into textile, kindly avoid that, whether it's Nitin Spinners, Arvind, or Alok Industries, etc., penny stocks, so on and so forth in the textile domain. The textile industry is going to suffer the most. And you will understand that because social distancing is the norm, and it cannot be maintained in a textile, you can say, factory where everybody sits together very closely. So this industry is going to suffer the most compared to any other due to this COVID thing. Avoid India Bull housing, avoid anything with debt, anything with interest, etc. Avoid those companies. Cadila Health is good. Actually, it has got hit because some of its drugs have not got approval for export from India, and some of the drugs in IPCA has not got approval for curing or helping in this pandemic, which many thoughts would be. So it is falling. Most of the pharma stocks are falling after a big run up. So, but I'm a firm believer. If you have a 2-3 year view, then Cadila is a good company to be in. All right. Alchem Labs is also good, but my best picks in this pharma domain is DV's, Dr. Reddy's, and Ipca Labs. Ipca Labs have declined post some news, but on major declines, it is a very good buy for long. Again, I want to remind you that kindly support me on on Patreon as well as on Super Chat here. And once you do that, it will help me grow the channel, and it will help you also eke out answers in more detail from me. So I just suggested the top three pharma stocks: so Ipca Labs, you can say Divi's, and Dr. Reddy's. Aarti Industry is a good stock to get into. It has run up probably 800, 850 would be good levels to get into Aarti Industry, but it has run up a lot recently. FL would be a good buy around 1100 to 1300 levels if you are lucky to get on declines because it has already fallen from 2300. But if you're lucky to get it at 1100, if the market falls, then I think one should buy into it. But I need to analyze then Syngene. So but there have been requests. So I'll analyze Syngene again with numbers, etc., and probably forward-looking numbers as to what it can do. See, what I can tell you is, although pharma is in fashion, so a lot of questions are coming in, and keep those questions coming in. Kindly like and subscribe my channel as well. I need more subscriptions to start with the join button. 13, 14,000 subscribers I have. Need to go up to 30,000. So kindly subscribe to my channel. Uh, See, the pharma sector did not do much over the last 3 years, at least 3 to 5 years. And after that, there have been a correction of that down move. So the down move started, and now some of the stocks are trading at 6, 7 times earnings. So it needs to correct to something like 13, 14 times earnings. Some of the marquee names needs to trade at 20, 22 times earnings, and that is what has been happening. And probably most of it has already played out. In that respect, it is very difficult to get into pharma now and stay in green over the next 1 year. We could see even massive corrections in pharma stocks, so it is not a safe haven. I can tell you that, and corrections can happen, especially after the kind of move we have seen in stocks. I have not thought about starting a group for daily calls, etc. But I'll definitely think about it later on. I need more, you can say, analysis over it, and I'll analyze and see what to do. But definitely, I'm going to start with a join button thing later on. But you can email me those people who are not able to get through Patreon, as they might not be having the credit cards, can email me and we can find out other ways of getting the same benefits to you. So kindly take that into consideration. Thanks a lot, Bar Subramaniam, for your super chat contribution. If you have, this is a super sticker contribution, and if you have any queries, kindly shoot that to me. Agreed, Kiran, that the free float in Tanla and Kilpest is extremely high. And yes, but you need to understand that when a company becomes more bigger, say a 10,000 crore market cap company or larger, then you get many marquee players getting into it. So a stock like Blue Star with 7, 8,000 crore market cap would be having more FII contribution than a stock like, of course, Tanla at 1,000 crore. That is not to say that Tanla will not outperform Blue Star. In fact, the numbers would be very robust in the coming 1 year of 3, 4 quarters. Same goes with Kilpest. So in small caps or micro cap companies as Kilpest is, it is very hard to find companies of small and mid cap which could do 30, 40, 50% growth year on year and also have marquee players entering it. Just imagine if top investors or FIIs buy those shares and then the free float becomes less, where would the stock be? Because there are X number of shares in the market, limited number of shares in the market, the stock would itself be expensive and not be at the price level that it is currently quoting at, and so the market cap would also expand. So it is a game of market caps. Currently, the market cap of Kilpes is 100 crores. Just 3, 4 months back, the market cap of Tanla was around 600 crores, and at those market caps, large investors do not get into it, and that's why retailers or retail players have more stake in the company. At SBI cards on any levels below 500 would be a very good level to get into. I still believe it is a 1,000 rupees stock, though that level of 1,000 may come in this year, next year, but 1,000 is coming in probably in the next 12 months or so, 12, 15 months. The level should go to 1,000 rupees. Deepak, fertilizers and chemicals, is it good? It is fine. Not quite a you can say the best brand I would say you invest into when it comes to chemicals, but it is a good company to get into. If you have bought into it, just stay put. If you have not bought, then you can look at the companies that I've just mentioned with respect to the chemical companies that I'm positive on. But again, standard disclaimer applies. Okay. Is Pidilite overvalued? Well, Pidilite is expensive, but you need to consider that what happens is whenever market goes through a shift and there is trouble in the economy, then the larger players gets the more share. So they end up having a more share of the market compared to the smaller player, and that is why this is going on. That Pidilite is going like bought into, and it is very close to all-time highs because we all know that the Fevicol product that it makes, it has usage in home as well as in, you can say, decoration in paints. So whenever paint happens in a home, then Fevicol is also used. Uh, in that respect, the leadership of Pidilite would increase even further with the lockdown thing that is happening. IRCTC is expensive even now, so I believe 1,000 to 1,100 would be very good levels to get into. If you're lucky and it goes below 1,000, that is even better. From a 3 4 year point of view, I have no doubt that the company would be uh, something like 50 40 50,000 crore company, uh, and will not be like where it is, and it has a monopolistic business. So I'm positive on IRCTC, but the current levels are expensive in my opinion. And into what? I think it can go up to 1,700. I bought into the stock, and that is a standard disclaimer for a trade. And my trade is for the stock to go up to something like 1,800 levels in the next 6 months. I would not be surprised if the stock goes up to 2,000 levels in the next 1 year, because it should be trading at 28 to 30 times, considering that the management is trying to make it into a technology company than the oil and gas company that it is currently is. I think there will be a PE re-rating of the stock, and we could see the stock trade well above 1,700 in the next few months. Avoid Axis Bank. There are a lot of things going on in Axis Bank, and I'm not very confident buying into it. So avoid such companies. In fact, avoid all kinds of banks and NBFCs at this point of time. Vinity Organics, good level to buy into is around 850, 860. It has run up, I understand that, but those levels of 670 to 700 were very good to get into Vinity, but now it has run up. So wait for major declines to get into. I won't tell you like exact what could be good levels, but major declines in the market, Vinity is a very good stock to be in for the next 2 3 years. Exide is an avoid, in my opinion. NCL is an avoid as well into the cement domain, a complete avoid. A water-base and both Avanti feeds are avoid. What you can buy is consumer discretionary, which comes under autos or consumer durable stocks like Voltas, etc. Many other white good companies that are there: Voltas, Hitachi, Blue Star, so IFP, and so on and so forth. but not many stocks that you can get into currently, because a lot of, you can say, flux would take place over the next 6 months. You need to understand that, and let's see who are the winners that would come out, and then we'll look at them. So thanks a lot for being on this live chat with me, and thanks for all the support that you have given. Kindly support me on Patreon as well, and through this channel by subscribing. Kindly subscribe and like and share my videos. Thanks a lot for watching.